Ahoy there, trader, and welcome back. This is the Anti-Investor Swing Trading Podcast. So let's talk about 7 rules to follow for trading success. Now, rules keep me sane, and it's also better than the make it up as you go along method that so many new traders and even overconfident traders choose. Because, after all, how hard can trading really be? Now, I've tried doing it that way, and I'm sure you've had. We've all, at some point, done the make it up as you go along method. But what separates me now to the me 25 plus years ago is the very fast development of finding rules to follow, making mistakes and realizing that, how can I put a rule in place that I don't do that again? And that's the approach that I took. So let's look at 7 of the high-level rules to follow that any trader can integrate into their regular routine for long-term success. So welcome to the Anti-Investor Swing Trading Podcast. This is where we talk about swing trading stocks, stock options, and index futures. My goal is to help the next 1,000 traders become financially independent and retire early from the financial markets by providing the right tools to use, the rules to follow, and the software to assist you so that you can make better decisions and don't make the same mistakes that I do. So from now on, I'll be your personal swing trading mentor and show you the way. And also, if you like what you hear today, please show your support by taking a screenshot and sharing on LinkedIn, and for bonus points, tag me in. Alright then, so the first problem that most traders have is keeping their risk small. We want to manage the trade on the entry with as little risk as possible. And again, this is one of those areas where a lot of traders will look at how much money they can make if they're right. But the reality is, as professional traders look at how little they can lose so that they have the ability to place the next trade and the next trade and the next trade. And for the newer trader or the retail trader who's not quite figured it out, that how much money can I make if I'm right really hobbles them when they get it wrong. You have that rabbit in the headlights experience, or they do, and they develop this fear, this inability to place the next trade because the current trade that didn't work out as expected just completely destroyed their confidence. So trade with as little position size as makes sense, to the point where you can have 2 or 3 losses back to back, and it's of no consequence to your ability to place the next trade or make the next trading decision. So as little risk as possible, and the profits take care of themselves. And the name of this game is consistency, and this is one of those elements that allows us to place the next trade, the next trade, the next trade, the next trade with the consistency and the frequency that we should do with our strategy. So very cleverly linking to the next problem that people experience is trade frequency. Now, what I mean here is you don't want to be firing off trade like pew 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 like it's Nintendo. You want to be trading with the frequency that your strategy sets up. So if today you get 3 opportunities, then you trade 3 opportunities. If you get none this week, then you don't trade this week. And this is why having certainly a very strict rule-based strategy to follow, that's what it gives you, because it's like if this then that, and I refer to what I do as a production line. We move our decisions along the production line until we get to the point where we place the trade, and it is a mechanical decision. It also means that I can put it into a computer and get all these theoretical historical performance reports to say, oh yeah, this has got a positive expectancy. This gives me one of several edges in my own trading routine. Anyway, trade frequency, and for example, my strategy and the stocks that I watch combined gives me a positive expectancy. Now, what I don't know is which of the entry setups and conditions is going to be a profitable one or a not profitable one. So what I need to do is I need to take the trade regardless of whatever I think, because what I know is that on average it's going to work out. So I have a small universe of stocks that I basically farm the opportunities. Again, I start all my traders off with, when it comes to stocks, top 25. If it comes to index futures, we have one of 3 strategies that we can apply, and we trade it to one market. And it's a very simple process to follow. And all we're waiting for, like, we've got 25 seeds, 25 stocks, and we've planted them in our portfolio, and that's our universe. There is nothing else for me to look at. It means that I won't have FOMO, I won't be bouncing around like a gummy bear, I won't be chasing stocks, chasing opportunities, looking through Twitter to find out what's popular, what's hot, what's not. That's my world. And all I'm waiting for is the little go condition to say, today's the day to put the trade on. And that's it. So I'll often be early to a trade, but I'll have the frequency that the trade's set up, but I should never be late to the party. And if there happens to be the to the moon experience on one of those stocks, I'll always be on it. You know, I often say I'll always be early to an entry or a movement, but I'll never be late to that party. So I've got to take the trades with the frequency that they set up so that I can emulate the strategy expectation, the positive expectancy that I'm expecting from, how many times can I say expecting? Get this positive expectancy that the historical performance reports have demonstrated that, hey, this has got a good equity curve. Maybe if I just take all the trades without deviation, without hesitation, without thinking too hard, then I should be able to emulate something comparable. It's never going to be exactly the same, so get that out your head straight away, but it should be able to be comparable to the historical equity curve. And that's what's again, keeping the risk small, having the trade frequency, and this assumes that you've got a plan, which is point number 3. Now again, follow a proven strategy. I've kind of touched on this with the trade frequency already, but technology today, it basically allows you to test a strategy and validate it and everything so that you can plug all the rules and the trade ideas that you've got into the last 20 years of data, or how much data you've got, last 50 if you've got it, but you can plug the trade logic into a computer and at the click of a button say, hey, if I'd just done this without thinking too hard, what would have happened? And you'll get a list of results. You'll get a visual equity curve of, you know, you're making money, you're losing money. And maybe if you're making money, but it's kind of like zigging and zagging, it looks like a consolidation if we were looking at a stock chart. It might be profitable, but not on an upward sloping incline. So we get to see these things when we have a rule-based trading system. Again, if you need help with this, shoot me a message. This is one of the things that I've kind of backed into becoming an expert in, because I wanted it for me first. I hated the discretion, the second guessing. I wanted to know with absolute clarity that when this happens, this is the step that I'm going to take, and if the click of a button I can prove that they're good rules to follow, because hey, if I'd just done that without thinking too hard, we would have made money. Again, and it's on average, not on every trade. So there's going to be winners, there's going to be losers. So it's that on average positive expectation that I'm looking for, that the first 3 rules really tie in together. Now, number 4 is the trend. The trend is your friend to the bend at the end. Think of it like a river of money, because it is. We want to trade, or I prefer to trade with the direction of the trend. You can trade counter trend. I don't find it doesn't sit well with my personality, so I often compare this to a river of money. The institutional traders, the banks, the people that have money to influence the market collectively are pumping their money like a river, and it's all flowing in one direction for a trend. And there's going to be little, back eddies, there's going to be little ponds, going to be little pools, there's going to be little moments where it just deviates slightly, but we want to get involved with the general flow of the movement. But if you try and go against that, if you try and swim upstream, it's really difficult to swim upstream. So we want to go with that river of money and trade with the trend. I find that that's the easiest thing to do. So all my strategies pretty much revolve around identifying, or for me, qualifying what I consider to be the trend. And we get it right most of the time, we get it wrong some of the time, and that's just the nature of any trading system. It's never going to be perfect 100% of the time, but if we can be right most of the time, then that's all we need to make some money in this world of the financial markets. So what we need to do as traders, if we stick with the river metaphor, we need to jump in at the optimal time and place to let the current wash us to our target. Very poetic, waxing lyrically there. So number 5, give yourself a trading window. Now this for me was quite literally a game changer. I don't want to sit here all day, every day, flicking through chart after chart after chart. You hear me say it at least once a week. somewhere on the podcast or in my live trading rooms. It's unnecessary to be flicking through hundreds of charts a day. I prefer a more farming approach where I'm just waiting for the opportunities on a small basket of stocks. And that means that my blood pressure is not ever reaching new high scores, because it's very easy to sit here at the computer looking through charts, and all you're really doing is giving yourself stress, anxiety. Is this the one? Is this the one? Is this the one? So I want to give myself a very small window of opportunities, and again, coming back to the rule-based trading system, have these conditions happen? If yes, place the trade. And it's 5 conditions I'm looking for. It's not like a laundry list of 37 items with annexes to each one. It's like, if has this happened? If yes, go to step 2, step 3, step 4, place the trade. That's it. And I want to be able to do that in 20 to 30 minutes, 2 or 3 times a week. Has this happened? If yes, place the trade. If no, come back tomorrow, move along to the next of the 25 stocks. And all my strategies are like that, whether I'm swing trading to get paid at the end of the month or the quarter, or even day trading. This logic can be applied today. I mean, from a day trade point of view, I've got 2 or 3 stocks that I like to watch. Again, for the reasons that I mentioned, I don't want to be doing it all day. I want to be done in the first 60 to 90 minutes of the day when I'm day trading. So I've got a setup that I like that identifies an opportunity today to see if there's an opportunity for tomorrow. So I can, at the opening bell, sit there for the same 10 to 20 minutes while I'm scanning for the swing trades. I can just come back and check to see if the day trade sets up. And if it does, place the trade. If it doesn't, well, check tomorrow. Well, check later today to see if there's an opportunity for tomorrow. Because I'll know today if I need to look at the opening bell, and if it's not there, I don't need to look at the strategy. So everything can be done in a very short window of time when you know what you're looking for. And if you're doing it for 2, 3, 4 hours, all you're doing is creating chart porn. It's nothing. There is nothing worse than sitting here all day and looking back on the day, for example, like you look left and you should have been looking right. You look up, you should have been looking down. There's always something that you could have missed, that you could have, would have, should have done, because you've not got any consistency or structure. So we get a lot of done if we can compress our time or compress our trading opportunities into 20, 30 minutes. And to be fair, when you're starting, you may take 60 minutes, but when you've got this refined to the point, it can be as little as 5 minutes a day. If there's nothing to do today, 5 minutes, done, come back tomorrow. But maybe you've got to spend 20, 30 minutes on one thing. Maybe, you've got, like, everything's going, all the strategies that I adopt are going off. So maybe I am going to spend 45 to 60 minutes at the day waiting for the setups, waiting for the opportunities, just moving the decisions on my production line further along to a live trade and a profitable conclusion. But don't sit there all day. If you sat there all day flicking through chart after chart, wondering if the next one is the one, then you're doing it wrong. Reevaluate. And again, if you need help with that, shoot me a message. I'll, back of the envelope, tell you, how I do it, what I do, so that you can apply some structure to what you're doing. Number 6, feed the mind. Feed the mind. This is not trading related at all. I meditate daily. I read avidly. I consume podcasts, and some of them, only some of them, are trading related. I'm obviously trying to keep myself up to date and see if there's new ideas, new angles, new opportunities from the trading market. I am passionate about this industry, but I also want to unplug. I read a lot of science fiction, science fantasy. I like space operas. I like swords, dragons. That's what I read. Reading for me is escapism. So I like to unplug completely. I don't watch a lot of TV. I like movies, occasionally, but reading is where I find greatest pleasure. But we also find that there's a lot of opportunities to develop as a person when we just step outside of that single focus of passion. So feed the mind, keep a curious mind. The best phrase I heard was from a gentleman called Paul Sheely of, I think it was Learning Strategies in the US. And it's have a childlike curiosity. He may not be the owner of that phrase, but that's where I heard it from, and it just stuck with me, more than 25, 30 years later. But have a childlike mindset and just be curious and ask questions about anything, and it really does start to help develop you as a person, a trader, and have an open mind. My other favourite quote is, and it's usually in relation to trading, but I think it's a wonderful metaphor for life as well, is always be prepared to change your mind with new information. I'm obviously paraphrasing. W.D. Gann quoted this in 1908 or whatever it was. 100 years ago essentially, but always be prepared to change your mind. And I'm adding my own twist on it, which is with new information, because with new information you can have a vastly different perspective in the markets and in life. So just keep that in mind. And lastly, again, also non-trading related, we want to feed the mind, the body and the soul. And this is as close as I'm going to get to hugging trees, but basically have fun. I want to enjoy myself. I want to do things that I enjoy. Again, I don't like sitting in front of the computer all day, every day, flicking through charts. I did it for 12 years. And it was enjoyable, it was fun, but at some point it was like, it became stressful. So you started to look for another way, and I found another way. So I enjoy long walks, I enjoy hiking, I enjoy exercising outdoors, I like flamingo spotting and going to zoos, and just generally doing things that don't involve sitting in front of the computer, and just having fun. Whatever you consider to be fun is what you should be exploring. Find a hobby, go fishing, start cycling, spend time with loved ones, because one of the great things about the trading, and I've been very fortunate and very grateful for the fact that I got into it very early and I've made a career of it, but it's also given me a lot of time freedom. And again, coming back to point number 5, when you give yourself this compressed trading window, you've got a lot of free time. We get paid to wait as traders. We don't get paid to trade and push buttons. We don't get paid more if we flick through 1,000 charts versus 50 charts. We've still got to find the setups, find the opportunities. You've still got to have structure and routine to your strategy to find those opportunities. But if you just spending 6 hours doing something that can be done in 20 minutes is not going to get you paid more. So it gives us a lot of time freedom. It gives me a lot of time freedom to do other things. Again, maybe it means that you can do it around the day job, around work, around family life, around other commitments. For me personally, I need to be at the desk 2 or 3 times a week just to maintain this. But I can take the Tuesday off for once, I can take the Thursday off, I can take the Friday off. I like to go hiking, I like to go walking, I like to do all the things that I mentioned, and just stimulate the mind, feed the mind, the body, the soul, have fun. Because otherwise, what's the point of doing this? A little bit of a sob story version. I've got Crohn's disease, and I had a priest stand over me and give me the last rites. It's not a pleasant experience, and with the COVID stuff thing, everyone's had this near-death experience. The whole world's had a reality check. I had mine in 2000 and whatever it was, 2002, and it was not pleasant. But everyone's had this reality check. Everyone has had the chance to evaluate, what do you want from life? I want to be healthy, I want to be happy, I want to do things that interest me, and I want to do less of the things that I don't want to do. So we all have a choice to do things, and for me, trading gives me the freedom to be able to have lots of choices. And we've all got a choice, but I'm very fortunate, very grateful to have lots of choices. So that's me. That last one is by no means least, it is very near and dear and close to my heart. Final thought on that, and then I'll sign off, is have a filter for things, just life in general. One of my filters is, will this make me happy? And if the answer's no, I'm probably not going to do it. And maybe that's just the grumpy old man in me these days. But, is this going to make me happy? Well, if the answer's no, then do you really have to do it? And I appreciate there's things that we want to do, there's things that we need to do, and there's things that we have to do. So appreciate there's things that you do for other people, but if you've got the choice, and we have the choice most of the time, if what you're doing or thinking about doing is not going to make you happy, it's okay to say no. It's okay to say no, and that means that it frees you up to do all the other things, to trade small, trade frequently, trade with a plan, trade with the trend. Give yourself 20 to 30 minutes that allows you to feed the mind and meditate, and then you get to enjoy the fruits of your labor, so you can feed the mind, the body and the soul, and do all the things that make your life enriched. So with that said, I'll call it a session. Give it some thoughts, and just keep asking yourself, will it make you happy? Now, if you like what you heard today, be sure to follow and listen to the very first episode where I map out the first of my 6 and most profitable money-making strategies. So that's all for today. Thank you for giving me your time and attention and making me a part of your regular routine. Have a wonderful day, and I'll speak to you at the same time next time. Toodaloo, trader. Keep in mind that futures, options on futures, stocks and stock option trading involves a degree of risk that may not be suitable for all investors. Past performance is no guarantee of future performance. Antivestor provides educational information and does not provide financial advice.